Hello, hello, hello. Check, check, check. Chalo. Very, very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Let's start right away. Ready? Sony, welcome. Deepak, welcome. Deepak, welcome. Welcome, welcome, welcome. We are left with two sums. Let's finish all the sums, okay? And let's finish it off. What say? Oh, but I am not visible. Okay, one more time. Very, very good morning, guys. Warm welcome to the best lectures of FMSM and Audit nationwide. Let's begin. Start. All ready? Arey yaar, all ready? Fast. Now I am visible. I am not visible because no like is there. As soon as you come, you have to like. Tomorrow, even if you want, you cannot like. Tomorrow, you want to like, you will not be able to like. Without like, I don't come. Chalo. Only two sums are there. Both are little on the complicated side. Okay. So both we have to do. Let's finish this off. All basic sums are over. All hard sum are also over. These are very hard category sum. Can we start? Yes, sir. Chalo. Let's rock, guys. Let's rock, guys. Let's rock, guys. The following particulars for Navia Limited are there for 31st March 2021. These particulars are given. Navia output 1 lakh units at normal capacity, selling price 40, variable cost 20, fixed cost 10. I can get my contribution as maybe 20 lakh, no, 2 crore, I think so. 2 crore. Okay, no, 20 lakh only. 20 lakh less fixed cost 10 lakh, so I will get EBIT as 10 lakh. From here only I can calculate. Capital structure is given here: 10 lakh, 5 lakh, 10 lakh, 5 lakh, 30 lakh. Okay, go ahead. Navia has decided to, okay, undertake expansion to use market potential that will involve 10 lakh. Now Navia is doing what? Expansion Navia is planning of more 10 lakh rupees. Good decision for Navia. Navia is truly good. The company expects an increase in output by 50%. Okay, we will also write the new figure. We will invest 10 lakh more. So our output will increase by 50%. Okay, right here, plus 50% is equal to 1,50,000 units. Okay. Yes, sir. Please write there itself. Huh? Plus 150 units. Okay. Go ahead. Go ahead. Go ahead. Fixed cost will increase by 5 lakh. Okay. Right here, fixed cost will increase by 5 lakh. Right there, plus 5 lakh. So this will become 15 lakh. Okay. 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 Continue. Variable cost will decrease by 10. Decrease by 10. Okay. Variable cost decrease by 10%. So 20 minus 2 is 2 rupees, is 18 rupees variable cost. Any doubt? No doubt whatsoever. The company expects increase in output variable cost. Additional output can be sold at existing price without any effect on the market. See, this output you can sell at normal price without any effect in the market. Means selling price will remain same. You can write here same. All figures will change except selling price. Okay. Continue. Following schemes are given. Okay, you want to do 10 lakh expansion. Currently you have something, you want 10 lakh rupees more, so entirely by equity share of 10 rupees each at par. So tell me, 10 lakh means 10 rupees means 1 lakh shares. You can write them. Second, 5 lakh by issue of equity share at 10 each and balance by issue of debenture at 100 each. Very simple. 5 lakh by equity share and balance by debenture. So we will write there how many share will be there. 5 lakh, 50,000 share. Entirely by debenture. Find out which alternative you would recommend based on risk and return, assuming a tax of 40%. Reading question very, 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 very important. What was the new thing in this question? If you did not understand, it's a capital structure question. Capital structure is a chapter which is pending, which we have not done. They have mixed leverage and capital structure, okay, and given a beautiful question. Now two options are there. Shall we do this question after we do capital structure or right now? This question contains leverage plus capital structure. Tell me, when should we do this question? Right now or after studying capital structure? Fast tell. Right now or after studying capital structure? We are getting late, huh, guys? This much time is not there. This much time is not there. Right now we will do CA inter income tax assessment year 23 to 24 as told right now. So right now assessment year going on. Let us start. Okay. Right now we will do. So tell me which plan we will select. The plan which has highest EPS and lowest leverage. Okay. Highest EPS based on risk and return. I want more return, so EPS should be highest and leverage should be less. Leverage should be less. Okay, leverage should be less. So right now what we will do, okay, we have to calculate EPS for four things. Existing plus three new plans are there. Okay, and then okay, calculate EPS under all four plan, also calculate leverage under all four plan, and then give our expert commentary. Very good, sir. Can we start? Can we start? Yes, sir. Now first what we will write there? Sum number 10. Just give heading. Summary of financial plans. I will make a summary of plans. So I don't get confused tomorrow. So I am just making a small summary. Particulars. I will write particulars, equity, preference, debenture. Right there, particulars. First plan is what? First plan is what? First plan is what? Equity. Next plan is what? It's a mix of both, I think so. It's a mix of both equity and preference. So I will write hybrid plan. Hybrid. And next is debt plan. Okay. Okay. Yes. Now, in first plan, equity share capital is how much? Entire. Equity share capital is 10 lakh rupees I need. 10 lakh I need. Entire equity share capital. So I will write here 10 lakh. In hybrid, equity share capital is 5 lakh. Debt nothing. Okay. Now 6% debenture is your 5 lakh and balance and your entire debenture. 5 lakh, your entire 10 lakh. I will do total. Excuse me. Oh my God. Any doubt? Any doubt? Any doubt? Any doubt? Any doubt? No, sir. No, sir. No, sir. Not at all, sir. Write the total capital employed. Now, I need to calculate number of share. Existing also I had some and I will have some new also. So, write there number of shares. First existing, new. Why are you calculating number of share? For finding EPS. So existing, how many share I have? Let me check it out. 1 lakh share they have given. So under all plan it will be 1 lakh. Existing were there. Tell me new how many share, new how many share, new how many share. That so you will know. How will I know? I am student. Okay. So in first it will be 50,000. No, no, not 50,000. 1 lakh, I think. 1 lakh new. 10 rupees each. So 1 lakh. Second, it would be 50,000. Year 0 because everything is debenture. So total number of shares 2 lakh, 1 lakh 50,000, 1 lakh. If you are done till year, capital structure part is over. Everyone has understood this much. Then capital structure part is over. If you are done with this, capital structure part is over. Write D if you understood. Any doubt first ask, only then we will go ahead. We have no hurry. This is of new chapter, that part is over. If you are done, type D. All seem to have come late, so they are still doing. Okay, we will wait. Any doubt till here? Any doubt till here? Now I just need to do my routine income statement. 4 column will come: existing, equity, hybrid, debt. Under all, I will calculate EBIT, EPS, leverage, everything, and then do conclusion. Now the routine sum is there, routine sum is there, routine sum is there. Right there, particulars. Income statement. Particulars are there. Now what we will write? Just divide it into 4 parts. Existing plan in new. Divide into 3. Equity, hybrid, debt. I will just draw columns. I think full page you might need. Now all is routine, all is normal. All is routine, all is normal. Okay. Where do I start from? Where do I start from? Where do I start from? Are you clear? Very, very simple. I will start from EBIT. Is it given? Okay, not given. Can I start directly from country? No, I cannot start. Why? Because in future number of units will be more, variable cost is changing. Okay, it will be little complicated. So let me start. Existing is normal sales. Existing sales are how much? Just cross multiply. 1 lakh into 40. 40 lakh. Tell me, under new plan it will increase by 50%. It will be 1 lakh 50 into 40. 150 into 40. 60, 60, 60, 60. 60 lakhs. After new funds come, my sales will increase. After new funds come, sale will increase. If you want, you can write in bracket. I will write here 150 into 40. Any doubt till here? Any doubt till here? Less. Variable cost. Tell me how much is my variable cost? 20. 20 lakh. But in future, they have told me it will become 18 rupees. It will deduct by 10 because volume is more. Volume is more. It will become 18. So 150 into 18, 27 lakh. You can write there if you want 150 into 18. Any doubt? No, sir. Tell me sales less variable cost. What will I get? What will I get? Not Kiran. Contribution. Done. Tell me less fixed cost. Fixed cost is how much? Fixed cost is how much? In existing 10. After new money comes, capacity increase, fixed cost increase by 5 lakh, 15. So 10 and then 15, 15, 15. Tell me country less fixed cost. Country less fixed cost. What we will get? What we will get? EBIT. Clear, clear. Now little hard. So break of 5 seconds. Start. Interest. Existing also it will come. New interest also. So existing will be same. Divide this into two parts. Existing, new. New will come 0 here. Existing how much? Come here. 10 lakh into 7%. 10 lakh into 7%. 70,000 rupees is coming. 70,000 will come in after expansion also. This will always remain. This is going to remain. This is going to remain. Okay. Now let's come to new plan. Let's come to new plan. In new what will be there? New what will be there? First, so no interest. Only equity plan is there. So no interest in new. Second, how much you have taken? 5 lakh rupees in hybrid. 5 lakh loan I have taken 6%. 30,000. Come here. Come here. Come here. Come here. I have taken 10 lakh loan into 6%. 60,000. I hope you are clear. If you understood this also, nothing is left now, guys. Ibichi. 9 lakh 30,000. 17 lakh 30,000. 17 lakh. 1670. I hope you are clear. I hope you are clear. Tax is given. Tax is given. Tax not given. Given. Corporate tax of 40%. 372. 692. 680. 1670. What will I write now? Pat, pat, pat. 558. 1038. 1020. 10 lakh 2000. Less preference dividend is not there, so I am not writing. Okay, if it was there, I had to write. This is also earning to equity shareholder. Over. Now what I will do? I will write number of shares. Copy from above. Copy from above. Copy from above. Earlier it was 1 lakh. Now it is 2 lakh. In hybrid it is how much? Just copy. Just copy. 150 and 1 lakh. Sir, oh sir, sir, I want to ask now, what will you calculate? EPS. What is the meaning of EPS? Per share, how much I have earned? Total earning this much. Per share, how much? Per share, 5.58. This is the worst plan. After funding, EPS is reducing. Useless plan. This little better, 6.8. At least more than existing. This is best plan. Debt is best. Adani, Gautam. Gautam best. Gautam is good. 10.2. Now what I will do? I will calculate lever, baby, leverage. Leverage. Lev. Understood. Operating leverage is equal to, I will write formula here. Contribution upon EBIT. I am not writing calculation down. For first one I will write 2 times 20 lakh upon 10 lakh. 2 is to 1. Come here. 33 upon 18. 1.83. Come to third. Come to third. Again same. All same. All it's coming 1.83 only. Any doubt? No. Now FL. 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 EBIT upon EBITDA. No preference dividend. No preference dividend. 10 upon 930. 10 upon 930. 1.075. I 18 upon 1730, 1.04. Come to third, come to third, come to third. 18 upon 17, 1.06. Last one, last one, last one. 18 upon 1670. 1.08, 1.08. Now, combined leverage, combined leverage, combined leverage. OL into FL, multiply, multiply. 2.15 is to 1. 1.90 is to 1. 1.94 is to 1. 1.98 is to 1. Finally, I have got all the answers in the kitty. This is my final summary. I can do as much of fun and analysis as I want to. Everyone is done till here. Type Y. If you are done, we will go ahead. If everyone is done, we will go ahead. So fast. Excellent. Now tell me, which plan should we select? The plan whose EPS is highest. Tell me whose EPS is highest. I will not tell. Existing, equity, hybrid or debt. Whose EPS is highest? Whose EPS is highest? Existing, equity, hybrid or debt. Whose EPS is highest? Earning per share. Whose EPS is highest? Existing, equity, hybrid, debt. Debt. So we'll do small tick mark there. If you don't want to do, it's okay. I will do. I will select this plan. Let me see its leverage. Risk is also more, but according to the risk, return is also more, and risk is very much less as compared to our existing plan. Existing already risk was 2.15. I am able to double the EPS almost by reducing the risk. So this is best. According to me, that plan is best. Why? My EPS is doubled, okay, and my leverage is still reducing as compared to my last model. My leverage is reducing, risk is reducing. According to me, this plan is best. Why? It's still better than my existing combined leverage, lower risk. See, this is reducing as compared to 2.15. Second, but if you still want lower risk, you are like, oh my god, let me act little conservative, then you can go for hybrid plan also. Why? Hybrid is 6.8, okay, hybrid EPS is 6.8, okay, but risk is little less. So lower risk, lower return, lower risk, lower return, okay, but never ever select equity plan. Why? Array EPS is lowest. Better than that, existing is better. Better than that, so existing is better. I hope you are clear. One more time. Out of all, which plan to select? Debt is best because EPS highest. So leverage is more, but as they say, more risk, more return. If you don't want to take risk, do BCom course. If you want to take risk, do CA course. Okay, but in CA, a lot of risk. Salary also double, EPS double, 2 lakh rupees per month, BCom 20,000 per month, 10 times more salary you get. So you have to take twice the risk, right? I hope you are clear. But if you are little less risky investor, you can go for second one. I hope you are clear. I hope you are clear. I hope you are clear. One more time, or understood? Understood, or one more time? Understood, or one more time? If you want, you can draw one summary of 3 plans. Right there: equity, hybrid, debt. You can write there EPS. Okay, just write there EPS. Lower, moderate, highest. You are also right. Risk is also lower, moderate, highest. I hope you are clear. I hope you are clear. See, in equity summary I am making, EPS is lower, hybrid moderate, debt highest, risk lower, moderate, highest. Okay, summary. Now we will write conclusion. Now we will write conclusion. Now we will write conclusion. If you are done, let me know. 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 Write there conclusion. We will select debt plan. We will select debt plan because its EPS is highest. We will select debt plan because its EPS is highest, comma, comma, though, THOU, though, EPS, though combined leverage is also more, though combined leverage is also more, 1.98. Combined leverage is also more, but it is less than existing leverage. But it is less than existing plan. But it is less than, what did you write? Existing plan. You can write there, it is less than existing plan, right there. 1.98 is less than 2 point, in bracket right there. 1.98 is less than 1.98 is less than 2.15. Okay, 1.98 is less than 2.15. Now leave one line and write again. If company wants to take moderate risk, if company wants to take moderate risk, it can also select. If company wants to take moderate risk, it can also select. If company wants to take moderate risk, it can also select. Tell me which plan? Hybrid plan. Company wants to take moderate risk, it can also select hybrid plan, in which risk is less but EPS is also less. In which risk is less but EPS is also less. But still better, in which risk is less but EPS is also less. In which risk is less but EPS is also less. in which risk is less, but still better than equity plan. But still better than equity plan. But still better than equity plan. Understood? Understood? Any doubt? Now tell me entire sum is over. If you have any doubt, let me know. Break. Any doubt, let me know. Ta ra 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 ra. San baniya. Sano vitarakda ega. Jan jaiye. Fully clear. Amazingly clear. Then type yes. If you are done, let me know. Done? Shall we go ahead? Ready, steady, go. Let's go ahead. This question was hard or easy? Did you understand it fully? Tell me yes or no. Hard or easy? This question. Very fast, very fast, very fast, very fast, very fast, very fast. Last question pending. Last question pending. Last question pending. Did you understand this? Hey, getting late. Fast. Everything they ask together. Chalo. Move on to the 12th sum. No reply. Net sale of company is 30 crore. Earning before interest and tax is 12% of sale. So 30 multiplied by 12. Do it how much? EBIT is 3.6. The capital employed consists of 10 crore equity, 2 crore preference shares come again, 15% debenture. Income tax is 40. Calculate return on equity. New ratio has come and indicates its segment due to presence of preference and borrowing. Calculate OL of the company given that combined leverage is 3. See, this portion is little difficult. Okay, except that sum is routine. Except this sum is routine. Okay, so let's do the routine part first, then we will do the normal abnormal part. What we have to do? Income statement. Out of income statement, OL they have already given. Find out FL. FL once find out. Okay, sorry, OL we need to find out operating leverage. Okay, combined leverage is given, so we'll find out financial leverage. From that easily we can find out what? Operating leverage, because combined is given. Okay, start. Sum number 12. New part is only one. Rest all very easy. Right there, income statement also is not there. Why? Because full is not given. EBIT only we have to start. Right. Particulars and rupees. Work. I EBIT. Tell me, how do I get EBIT? 30 into 12%, 3.6. rupees in crores. Clear? Clear? Yes, sir. Now let's, what will happen? Interest. Interest. EBIT is 12% of sale. Now I will do what? Interest. Tell me interest is how much? Interest is how much? 15% debenture of 6 crores. So 6 into 15. 0.9 is interest. 0.9. I will write in bracket 6 into 15%. What will I get? EBT. 2.7. Go ahead. Go ahead. Less. Tax is how much, guys? Tax is how much, guys? Tax is how much? 40%. 1.08. PAT is how much? PAT is how much? 1.62. Clear? Now, PAT is for both equity and preference. Some portion to you equity, some portion to you preference. Both are earning together. Less preferential dividend. How much? How much? How much? 13% of 2 crore. So 2 into 13%. 0.26. This is return to, or more than better, return profit to equity shareholder. Profit to equity shareholders. How much? Minus 1.62, 1.36. Any doubt till here? First of all, stage 1 is over. Did you understand this income statement? Then half battle we can already win. Till here clear? Yes, sir. Super, duper, amazing, fully, mind blowing, clear. Now, return on equity is a new thing for a company. So, we'll do that later. Let's start with portion number 2. Calculate OL of the company. Given that combined leverage is 3. But can I calculate FL first? Financial leverage. Formula. EBIT upon EBITDA minus preference dividend, 1 minus tax rate. Any doubt? EBIT upon EBITDA minus preference, 1 minus tax rate. Oh, come on. Oh, come on. Oh, come on. How much is EBIT? 3.6. New formula, brand new formula, invented today, 2.7. Minus preference dividend is how much? Preference dividend, tell me, 0.26. 1 minus tax rate, 1 minus 0.4. 2.2666. 1.58 times or 1.59 times. Is this correct? We will check once again. No, I think it's a mistake. Correct. 1.59 times is perfect. Now I can easily get ole, 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 ole. OL. CL is equal to OL into FL. This is 3. This I need to calculate. OL is equal to, tell me, 3 upon 1.59, 1.89 times. Till here, everyone clear? Then I will move on to the new portion, amazing portion. Okay, absolutely brand new portion. Now let's multiply into 1.59. Got answer 3. Perfect, amazing, mind blowing, excellent, very good. Clear. Go ahead. Go ahead. Now what I will do? Calculate return on equity. I have to calculate return on equity and indicate how much preference is contributing, how much borrowing is contributing to return on equity. But first, what is return on equity? See, ratio chapter will come in every chapter. So this is from a ratio, but no problem. No problem. Let it be from any chapter. Return on equity is equal to, tell me, what is the formula for return on equity? What is the formula for return on equity? Means not profit to all, profit to only equity shareholder. See, this is profit to both. This is profit to both. Okay, Pat. But what do you mean by equity? Equity is return to equity shareholder. So I will write here earnings to equity shareholder upon not all funds, equity shareholder funds into 100. Tell me, equity shareholder fund doesn't include preference, okay, because we have already given dividend to them. Equity share capital plus reserves and surplus. How much is equity share capital? 10 crore. Reserves are not there. 10. So I will write here 10. And what is this? 1.36 upon 10 into 100. 13.6%. Now listen to me very nicely. The most important ratio. I am not concerned with total return on capital employed. That is for both debt and equity. Out of that I get PAT. I will give to preference dividend. What is exclusively left for equity shareholder is known as return on equity, which is 13.6%. How do I get it? Profit to equity shareholder after giving preference dividend upon equity shareholder fund into 100. Why did you write total shareholder fund? You did not write, because this return exclusively belongs to me, baby. Who is baby here? Equity shareholder. Only to them. Before going ahead, I want to ask one last question. Tell me, which ratio is most important? Return on capital employed or return on equity? Tell me, which ratio is more important? Return on capital employed or return on equity? I want to know right now. Small break. 10 second. 10-second break. Which ratio most important? Return on capital employed or return on equity? Which ratio most important? If you don't reply, I will wait. If you don't reply, I will wait. ROE, 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 R. Why? Because that is to me. I am not concerned about that. I am investing. I am equity shareholder. Always, always, always. One more question. Always. Did you understand this? Tell me. always invest in a company where return on equity is more than at least FD rate. If return on equity is 7%, better I go to fixed deposit and invest there. Always whenever you look at any company, ROE should be more. If return on equity is more, half things are already sorted in life. Return on equity is a benchmark indicator. If that is high, everything in life is sorted. Okay, some people will invest in a company where you don't ask someone whether should I invest or not. Directly open screener. In screener, check two things: ROCE, ROE. Both if are more, 30% and 20% above, company has to increase. Okay, share market will increase or not, but that company cannot fall. Why? ROE. Let me also calculate ROCE for this company. ROCE, just like that. Return on capital employed, right there, is equal to EBIT, is for both, upon capital employed into 100. Tell me, EBIT how much? EBIT how much? EBIT how much? 3.6. From where you got this figure? Above. Upon, 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 upon 10, 2, 6, 18. How did you get? Plus 10 plus 2, 12. 12 plus 6, 18 into 100. 20%. 20%. Why ROCE 20 and this? Due to interest. Overall my thing is 20, but already interest people are taking something. So I am left with only 13%. Sony is telling, Sony, equity also includes preference. Understood, Sony, only for accounts. If they ask you return on funds, return on total funds, okay, then we will write. Okay, if they ask you return on shareholder fund, then I will write both equity and preference. But it is shareholder fund. Return on equity also includes preference, wrong. Return on shareholder fund include both. This is not share exclusively equity. It's after giving to preference. After giving to preference. And in real life, Sony, I would like to tell you, except your accounts book and except in your brain, preference is never there. Removed long back. In practical situation, there is no preference. Only what time pass preference is given here. In real life, preference is not there. Removed long back. I hope you are able to understand. Did you understand? Concept, array yaar, what is given in book useless. Did you understand life? What is there? Fast. I am also waiting. Let us wait. Others, what they are doing, God knows. Chalo. Now everything over. Return on equity also I got. Come here. Indicate the return on equity that's coming due to preference and borrowing. See, return on equity, lot of people are contributing to the return. How are they contributing? Now what you have to do? Nothing. Just look here because you will not understand. This is hi-fi. How much others are contributing for return on equity? So three people are contributing. Equity, preference and debenture. They only told. I did not tell. So I will calculate EBIT for all. How will I calculate EBIT? It is capital employed into 20%. How did you get, sir? Not understood. My ROCE is 20. So whatever is the capital, I am able to earn 20% on that. Okay. Yes or no? So tell me, how much is equity here? 10 crore. So 10 into 20% I am able to earn. 2 crore. Rupees in crore. Tell me how much preference is able to earn. How much preference is able to earn? 2 crore rupees into 20%. 0.4 only. How much debenture is able to earn? 6 into 6 crore it is there into 20%. 1.2. Now if you do the total, it will be 3.6. 3.6. Answer came. Now what I will do? Less interest. I want to know how are all these people contributing to equity shareholder. You will not understand anything. Just look at it. This will be dash. This also dash. In debenture, how much interest is there? Check. 6 into 15%. 0.9. Clear? Yes, sir. Any doubt? Any doubt? Any doubt? No, no, no. What is the tax rate? 40%. PAT. Less preference dividend. Less preference dividend. Less preference dividend. How much? How much? How much? Equity dash will come. In preference dividend is how much? 2 into 13%. 0.26. Year dash. So earning to equity shareholder. Negative. Negative 0.02. Now you will be wondering, why did we calculate this? Let me tell you, wait, still you don't have to do anything. Now, equity, debt, okay, how much is equity? How much is total fund? So, equity is contributing how much? 1.2 upon total funds of equity at 10 into 100. Total equity is 10, no? Yes, 12%. Preference is contributing negative. Debenture. Now listen what has just happened with you, you did not understand. They are saying, now read this line, don't do anything. Indicate the segments. Segment means division. We are getting ROE of 13. But who is contributing towards ROE? Are you clear? Is preference contributing, borrowing, or equity shareholder themselves? So what we did, we took total capital employed, multiplied it by whatever portion, equity portion is this EBIT, to find out EBIT. How did I get that? Capital employed upon EBIT into 100. So I did reverse. Capital employed into ROC, EBIT I got. Less interest, less tax, less. Whatever are the earnings. Now equity shareholder is 10. So I divided all by 10. Means equity is contributing 12%. Preference, due to the nature of preference, they are contributing negatively towards me, and debenture positive. So once I do 12, minus 0.2, 1.8, 13.6. It should match with this 13.6. Matching, answer correct. Segments, how are all contributing? Little tough because ratio part, but I hope you understood. Did you understand or no? I don't know. Did you understand or no? I don't know. Did you understand or no? I don't know. Copy if you are copying at all. Fast copy. Done. If you are done, let me know. If you are finished, let me know. Once you are done, let me know. Done? Any doubt? If not, shall we go ahead? All sums are over, but one concept is pending, which is from MCQ. Okay, shall we discuss that? Are you ready? Or your brain is gone? If your brain is pending, we shall discuss that. Then discuss MCQ, then leave. Or if you are too tired, only MCQ and leave, as you wish. Fast. Are reply whatever is there, all sums are over. Fully you should be confident now. Any sum of leverage comes in this world. Enough practice we have done. Yes means what? Regarding what you are telling yes. Discuss the concept or start MCQ. What is written please? Not able to understand. So this heart comes no, so I cannot read also. What comment is there? Income tax is not replying. Full concept, MCQ. Not able to understand only what you want to write. Both you wrote. Discount concept. Discuss concept. Okay, 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 okay. Chalo, one last concept is there, then we are done, and then MCQs will come tomorrow morning. Okay, sorry, tomorrow the timings are 12 to 2 now, always. Till Saturday, time is only one session, 12 to 2. We might not discuss in 12 to 2 MCQs. If we finish this concept, well and good. Some are saying MCQ, some concept, MCQ concept. Last concept pending, let us discuss, and then we will move on to MCQ if we get time, but I don't think we will get. You know what is margin of safety or no? Does anyone know what is margin of safety? Tell me yes or no. What is margin of safety? If my break even sales are 15,000, I am able to achieve 20,000 of sale. Then how much extra I have done? 5,000. That's my margin of safety. 5,000 upon 15,000 into 100, 33%. Let me take example. Is equal to actual sales minus, in costing it comes, break even sales divide by actual sales into 100. If you don't know, 1, 2, 3, start. My break even sale at which EBIT 0 is 15,000. But I am able to do sale of 25. Divide by 25 into 100. Simple words. How much extra sales I am able to do? 10,000. Upon, on what I am able to earn 10,000 more? 25,000. What is margin available to me? 40% extra I am doing. Meaning of this concept, if my sale reduced by 40% also, no tension, I have extra cushion of 40%. Till that time my cost will be recovered. If my sale fall below 40, means directly I am gone from life. My EBIT also not able to recover. I hope you understood this much. This you already know. Now what you have to do? Just multiply. This concept is there. Just multiply in this PV ratio, multiply profit volume ratio. Here also multiply both places. If we multiply at both places, okay, reverse, so effect will not be there. Then why are we multiplying? To derive a formula. If I multiply PV ratio, profit volume ratio, also known as contribution, at both places, what will happen? Check it out. Check it out. Check it out. Actual sales into PV ratio minus break even point sales into PV ratio upon actual sales into PV ratio. You don't have to do anything. Listen nicely. I hope you understood with this much. Okay. Actual sales into PV ratio minus break even sales into PV ratio divide by actual sale into PV ratio. Clear? Clear? Yes, sir. Super, duper, amazing, mind blowing, excellent, clear. Now, what is actual sales into PV ratio? You only know sales into 25% I am able to earn. Contribution. My sales into PV ratio in English I call it contribution. Minus little costing, if you know, break even point into PV ratio is fixed cost. Break even point into PV ratio is fixed cost. Upon actual sale into PV ratio, contribution. So this is contribution minus fixed cost is what? Contribution minus fixed cost is what? EBIT, earning before interest and tax. Clear till here. Clear till here. Now, margin. So new formula of margin of sale is EBIT upon contribution. Now if you remember our OL formula, ole, 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 ole. Contribution upon EBIT. If I do reverse, if I just multiply, divide by 1 upon, what will happen? EBIT upon contribution. EBIT upon contribution is what? Margin of safety. Over. Reverse of doll. And margin of safety is what? 1 upon OL. So easy, so simple, so beautiful, looking like a wow. Understood? See, this is EBIT upon contribution. I just reverse 1 upon contribution upon EBIT. So 1 upon MOS, or MOS is equal to 1 upon OL. Now tell me, listen. You have to reply now. More margin of safety is equal to more sale or less sale? More margin of safety is equal to more sale or less sale? More sale is equal to less leverage, is equal to less risk. Yes or no? If sale is more, risk will be less in life. But my margin of safety is less, then my sales also less, then my lever will be more and my risk will be more. I hope you understood. Understood. Let's prove it. Let's prove it. Oh, come on, baby. Let's assume 1 upon 0.25. My margin of safety is 25%. So do OL is equal to 1 upon 25. So what is OL? 4 times. Now assume margin of safety is 50%. 1 upon 0.5, 2 times only. My risk is reduced drastically because I am able to do more sales. My risk is reduced because I am able to do more sales. So more margin of safety always good. If you don't understand anything, simple, remember one thing in life. More margin of safety is equal to more sale is equal to less leverage is equal to less risk. Less margin of safety is equal to less sale is equal to more risk is equal to more leverage. I hope you understood. Yes or no? Did you understand this or no? Tell fast. Did you understand this or not? Tell fast. We can do some also, or as we'll do some tomorrow if you want on this. Reply little fast, we are getting late. You want to write this derivation or direct formula? You want to write this derivation or direct formula? Yes is what? Derivation or formula? Yes is what? Yes means what? Derivation you want to write? Write this. Copy. Margin of safety is equal to actual sale minus break even sale upon actual sale into 100. Multiply both by PV ratio. Copying? No. I hope you are copying. Then don't write figures, just multiply PV ratio. Now, actual sale in PV ratio. Every time we did, my sale is 20,000, PV ratio 60%, that's contribution. Minus BEP sale into PV ratio is fixed cost. So EBIT upon contribution. Copy this much. If done, let me know. If done, let me know. Done? So this is EBIT upon contribution. Just reverse of what? OL. So MOS is equal to 1 upon OL. I can also do like this, 1 upon contribution upon EBIT. What is contribution upon EBIT? Is equal to 1 upon OL. 1 upon OL. More safety, less risk, less leverage. More safety, less risk. Done? Copy it till here. Copy it till here. Come down now. Right from OL perspective also till here. In magic book, check if this formula is not there, include, because it is extra. Okay, this one formula, rest everything is there in magic book. In one page, entire chapter over. In one page, chapter over. Done? Any doubt? MOS is equal to 1 upon OL. Write this also. More margin of safety, more sales, less risk, less leverage. Less margin of safety, less sale, more risk, more leverage. This also copy. Clear? Shall we do 5-6 MCQs or no? You want to discuss 5-6 MCQs? It will take 15 minutes. We can finish all if you want. Or no? If tired, then no need to do. Only MCQ pending, nothing else pending. As you wish. You will do. All are ready. Only I am tired. Chalo then. Chalo then. On your screen. Might take 15-20 minutes, but we'll finish. But all are saying yes, what to do? Chalo, start. Leverages. MCQ. Let's start. On your Kelsey, you have to do. MCQ will be like this only now in FM. Okay? Start. Fixed cost 20. 1, 2, 3, baby, boys, girls, rock. Tell me OL is how much? OL. Sales into 40% is contribution. So did you get contribution 40,000? Did you get contribution 40,000? Yes, I to got, sir. Sales into PV ratio. Country minus fixed cost is EBIT 20. 40 minus 20 is 20, yes or no? 40 minus 20 is 20. So 40 upon 20, answer is 2. Did you get 2? Type Y or S, type no. Did you get 2? Type Y or S, type no. Very, very simple. If you did not understand, I have to do it here. See, sales into PV ratio is contribution. So contribution is how much? 40. How did I get? Sales of 1 lakh into 40%. Less fixed cost 20. What is this? EBIT 20. So 40 upon 20 is how much? 2 times. Over. Over. First answer. 2 minutes it took. Go ahead. EBIT is 15 lakh upon interest 250 minus 1250. I got EBIT upon EBT. Answer over. 15 upon 1250. 1.2 answer I got. Did you get 1.2? In 1 minute it should come. 1 minute. Okay, EBIT upon EBT. 1.2. Answer over. Shall we go ahead? Type Y. Type Y. EBIT upon EBT. Next. DOL is 1.24. DFL is 1.99. Multiply 1.24 into 1.99. 2.467. That is 2.47. Answer got. Any doubt? Any doubt? No, sir. Operating leverage formula they are asking. Kids formula. Kids formula. Kids play garden. Country upon EBIT. Financial leverage formula EBIT upon EBT. EBIT upon PBT. EBT or PBT same. B. Any doubt? Which is correct? CL is equal to OL plus FL. No. OL minus FL. No. OL into FL. Combined leverage is OL into FL. Any doubt? Any doubt? No. Which of the following is a business risk? 3 risks. Business, financial, combined. Business risk is indicated by operating leverage. Financial leverage, financial risk. Total risk, combined leverage. Degree of combined leverage is, what's the formula? Percentage change in dependent upon percentage change in independent. Percentage change in EBT upon percentage change in sale. So percentage change in EBT is where? EBT is not given, so EPS also okay. This one. Percentage change in EPS divided by percentage change in sale is combined leverage. B. Any doubt? Any doubt? No. How we will get this one now, sir? Combined leverage they want. What's the formula? Country upon EBT. See, OL formula is what? OL formula is what? Country upon EBIT. FL, EBIT upon EBT. EBIT cut. Country upon EBT. How to calculate? In 1 minute over. Let me start here. Directly with contribution. If variable cost is 40, contribution is 60. So 20 lakh into 60%, 12 lakh. How did you get it? It's not 40 then 60, less fixed cost. Here we don't need to show working in MCQ, it's for 1 mark. 10 lakh. Tell me what will I get? EBIT. 2 lakh. Less interest. 10 lakh into 8%. 80,000. 10 times answer will come in 1 minute. Country upon EBIT. 12 upon 1.2 lakh is 10 times. Is given 10 times? Yes. Any doubt then tell. Any doubt then tell. Any doubt then tell. 10 times. If you calculate again, it will be easy. Operating leverage is due to several factors. Ole, 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 ole. Is due to variable contribution margin. Variable contribution margin. FL is what? It's percentage change in EBIT. Sorry, percentage change in EPS upon percentage change in EBIT. Use of funds to increase earning per share. Use of funds to increase earning per share. Use of funds with fixed cost. Correct. 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 To increase EPS. This is correct. See, in FL, what I will do? Use fixed cost to increase EPS. Okay. Yes. Fixed cost. Oh my God. Today's concept has finally come. The concept for which we are living in this world. Margin of safety is 0.25. 8% increase in output. Then EBIT will be how much? Break. Margin of safety is 0.25. Then first let me find ole is equal to 1 upon MOS. 1 upon 0.25. 1 upon 0.25. In calci 4 times. Now anything I can get in life. EBIT will change by this much. Sale will change by how much? If there is 8% increase in sale, how much will EBIT increase? So OL is equal to percentage change in EBIT upon percentage change in sale. Tell me my sale is changing by how much? My sale is changing by how much? 8%. This is 4. Baby, 32%. Did you get it? Did you get it? Did you get it? Yeah, 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 yeah. Ole, ole. Increase, then increase by 32%. If degree of financial leverage is 3 and there is 15% increase in EPS, then EBIT will be percentage change in EPS upon percentage change in EBIT. So 45 will be the answer. Increase by 45. How? Take formula, percentage change in EPS upon percentage change in EBIT. If EBIT is changing by 15, multiply by 3, 45%. Clear? Yes. When EBIT is much higher than break even point, EBIT is much higher than break even point, then degree of financial leverage will be. How many questions are there? A lot of are pending. What to do? Finish or no? See, when EBIT is more than break even point. Okay, then financial. See, if EBIT is equal to break even point, then financial leverage is 1. Okay, but if EBIT is higher than break even point is 30,000, but EBIT is 50,000, then it will be more than 1. Answer will be more than 1. Why more than 1? Contribution upon EBIT. So the figure will always be more. It will be more than 1. Firm with high operating leverage will have, whichever has high OL, it has high fixed cost or higher break even point. See, if your operating leverage is high, means your fixed costs are high, means your break even point is high. Okay. When sales are at break even point, when your sale is at exact break even point. What is break even point? No profit, no loss. No profit, no loss. Then what will happen? Okay, then what will happen? What is the formula? Contri upon EBIT. Contribution, let's take any figure. But if EBIT is 0, any figure divided by 0 will be infinity. One more time I will explain. Listen nicely. When sales are at break-even point, what's break-even point? EBIT 0. What's the formula of ole contribution upon EBIT? Any figure of contribution take 1 crore. But if EBIT is 0, 1 crore upon 1 you do. Don't do 1 crore, do 1 upon 0. 1 upon 0 is error. Infinity answer will come. Infinity. 1 upon any figure 0 is infinity. Sorry guys, last question. If degree of combined leverage 3, margin of safety 5, what's financial leverage? Tell me first of all, what is the formula of OL? 1 upon 0.5. So OL is a 2, combined is 3, FL is how much? 3 upon 2, 1.5. Any doubts we will discuss tomorrow. Hopefully it's done. Good night. Bye bye. Sabba care. Love you. Take care. We will discuss doubt tomorrow and also start new chapter. Bye bye. Love you. Take care. Guys, if you like the lecture, then feel free to take India's best lectures of FM, SM and Audit. Full conceptual clarity. Okay. More lectures will take place in the app. Bye bye. Good night. Take care. Bye.